Welcome everybody to episode 10 of Money, Life and Gags with Harry and Mark. How are we going, Harry?
I'm doing really well. How are you?
Very good, mate. Very good.
On the move today because we're going to talk about trading as opposed to investing.
Yes, and one topic we're not going to talk about is technology and how frustrating it is when things don't work.
I know.
We're not going to talk about that because
we've just been at it all day.
Take the whole.
Yeah, it does.
I was going to swear then.
I
That would take the whole podcast if we went through that. So I'll vent later.
Anyway, that's we're over the IT bit now.
Well, I think one day
we
can do a podcast for dumb shits, and
we'll figure it out. So, Mark, trading as opposed to investing. Let's go with the basics. In your world, what's a trader?
So a trader is, well, if you look at the fundamentals of what's the difference between a trader and an investor has a longer term time frame for their investment, whatever it be. Could be money in the bank, could be property and so forth. A trader has a very short times,
How short, Mark?
It can be anywhere from a minute to two, where they're called tick traders, and they're just looking at movements in something, any commodity, any price, any indice, any stock, whatever it may be, on a 1 second at a time, and over a minute to 2 minutes, they could be in and out 2 to 3 times, and they're taking very short trades, very strict. Stop loss on it, and we'll explain what stop loss is in a minute.
Very important.
So that's at its micro level, or high intense level, all the way to you might trade off using daily charts or any technical analysis or whatever rationale you use for your trading, and that could be over a 2 to 3, 4 day period. It depends on everyone's profile, what their preference is, what they're geared to do, what they're good at, what parameters they use, what analysis they use. Unfortunately, you get too many people in the traders world that don't have a plan and don't have information at hand, or don't use the information that is at hand to make decisions, and so they're sort of speculating a lot, just getting in and out of different things because it's moving upwards, moving downwards, and you get whipsawed a fair bit out of getting in and out. Because of the way the market is, and so people think they're trading, but they're really just donating money to a lost cause because they don't have a plan. And
so if I said to you, if I describe that traders are gamblers, how would you go with that statement?
It's like everything is within moderation. So yes, there are traders, and trading in nature is a gambling form.
Because essentially you are gambling, Mark. You're not investing.
It depends on your plan, right? So I would argue that people who, and we're talking about whether it's a gamble or not a gamble, not if it's an investment, right?
Correct.
Right, because an investment is a different mindset altogether.
Absolutely.
But if it is trading a gamble, I would argue at the top end where people are highly geared, they use all the data, they have, they use technical analysis, and Google that if you don't know what that is, and they use every piece of information available that a trader needs to make some levels informed decisions for
this entry. This is the top 1%?
Entry and exit points.
Yeah.
Could be. Well, it sounds like it's maybe the top 24% based on the stats you told me earlier. But and those people are optimized. They know their space. They protect their capital. Their losses are very minimal. Their gains are multiples of their losses. And so they run it like a fine-tuned oil machine, and they pick their instrument or their asset class that they're going to trade in. Those people, I don't think they're gambling. Whether you agree or don't agree, and it's not for you and whatnot, that's a separate discussion. But I don't think they're gambling, because gambling is just you going for luck. And when you use that level of sophistication of data and analytics and so forth, it's probably 50% luck or 30% luck. It's not 100% luck.
How long you've been trading for? A long time?
In and out. I used to be a heavy trader back, my younger years when I didn't have white hair, grey hair. Yeah. And I used to be a day trader, and I used to be part of a day trader community, and we used to get in and out of stocks every 15 minutes, every hour, whatever.
That's
whatever
a classic
occurred.
day trader.
Yeah, that's a day trader. Where did it get me in the end? I certainly didn't make money, and I didn't make enough money to retire, and so either I'm a bad trader.
Actually, that's a really important point, because most people who want to go on the journey of becoming a trader, they think they're going to become a multimillionaire very, very quickly.
Yeah, it's tough.
That's the mindset.
Yeah, and every now and then there is someone that is lucky or really, their mindset is really attuned to trading, and so they do very well. But that's the minority. The majority of people, what was the stat you gave me earlier?
73.6% of traders lose money.
Yeah, so
That's a high percentage.
And I don't know what the percentage of gamblers there are. I would say gamblers on horses and sports might be higher than that.
Probably.
Because it's a binary event, whereas in trading, sometimes a lot of people will hold their trading position, even though it's supposed to be short term. If they can't accept the loss, they'll hold it. And so they might have an ability to turn that around. So it's not a binary event. But that's still a pretty high percentage. And so that tells you a lot more people, are losing rather than winning. But if you did an assessment on those people, I would probably find most of those people don't have a plan. And the plan involves, okay, how much money am I putting at risk? Is that money I can live without? Which is, if you're doing trading, really that's what you should be doing. Don't put your household's money on the line for trading.
We should talk about that as well.
Yeah, we can elaborate on that.
Yeah.
But certainly only play with what you can lose. Play with small amounts of money while you get your craft. Build your knowledge base and so forth, because the best way of losing is being in live trading. You can do paper trading, which is non-investment. You just play money, but the emotions aren't there. So you got to have some hard-earned money on the line, but just start with small amounts.
$1,000.
Yeah, $500, $1,000. The leverage that you get through some of these platforms, that's enough.
And
incredible. And just do that and see how you go, and then see how you go when you're down, because the emotional reaction you have when you're losing money, that'll determine whether trading is for you or it's not for you.
It's all emotional. I've been doing this for a long time, and I can't tell you, even today, sometimes my emotions get the better of me, and therefore I cannot make a clear decision. Usually that happens when you're losing money. So you put a trade on and it's negative. No one wants to lose, but I think a successful trader ultimately is the one that knows how to manage his or her losses.
Yeah, I agree totally with that. And this is not a standard formula, but my understanding of a lot of those successful traders, for every dollar they put at risk on the loss side, they want to make somewhere between 2 to 4 times on the plus side. And so if they're trying to make $4, they'll have a stop loss at $1. And so that means if they buy something at $100, at 90, if that thing trades at $99, they're out. It's just clinical, they're out, and they just worry about the next trade. And it's the body of trade and the accumulated event of those trades is what they're targeting, not one specific trade. So if they lose $1, they lose $1. But when it goes to the upside and they can make the dollar, make that $3-4 zone, then generally what they do is they move their stop loss up to break even, so that when it's in profit zone, if it wants to go a bit further, let it go a bit further. But if it doesn't and it comes back, well, you actually lose nothing, because it goes back to your entry point. So that's a lot of what these traders do. Because they're in and out so often, they have to be that disciplined, because otherwise there'll be one trade that they don't have a stop loss and it'll go south
and they'll get blown
go
up.
The wrong way, and then that hampers all their other trades because their capital's all built, captured by that one trade. And so it's there is an art to it, and if you study and you do it small and you learn on the job types thing, it's good fun. You can do okay out of it. Would I recommend people quit their job and do trading?
Absolutely not.
It's there's a very minor percentage of people that are good enough at trading to do it as a full-time job. And so,
I agree.
So, and I'm talking about the trading on the high volume trading. Obviously, people are fund managers and investment managers and so forth. So there's a lot of those sort of people around, and they're quite successful. They're delivering
different class, though.
Yeah, they're different. They're more investment based, not trading based.
Yeah.
Because they're trying to beat the All Ords index or the ASX 200 index or whatever it may be, and so they just have to, as a fund, beat that. Whereas traders are looking for compound returns, and so they want 1,000 to turn to 2,000, 2 to 4, 4 to 8, and just keep doubling and grow their portfolio.
And with trading, you have to be really quick.
Well, you do, yeah, absolutely.
You have to be really quick. So the notion of someone,
but also if you're not quick, don't chase it. So if you haven't got in at the right entry point, don't just sacrifice the entry point. So it doesn't matter. She'll be right. I'll go that extra few points up because that could be your profit margin. Yeah.
So it's definitely quick. You can make good money. You can lose quick money really quick too. Someone getting started, say start off with $1,000. If you can turn that 1,000 to 2,000, that 2,000 to 4,000, easily said. Even if it took you 6 months, you learn about yourself, what you can and can't handle.
But even if you're starting at that 1,000, Don't put the whole 1,000 on the line.
Oh, no, you're gone.
On your first bet.
Oh, no, you're gone.
Your first trade.
Well,
right?
it is a bet.
So if you're doing a trade, think break your 1,000. Like the way I would look at it is break your 1,000 into quarters. So your first investment it's $250 exposure. What am I prepared to lose on that 250? Is it 10%? Is it 20%? Is it 5%? You've got to determine that for yourself, where your risk profile sits, and then stick to that. So every trade is $250. So you don't have to make a big killing on your first trade at $1,000, and then the 1,000 turns into $300 because you got your stop loss wrong or whatever it may be. Just break it down into those quarterly instruments, and that'll be your greatest learning curve, because then your money's on the line, but your future's not on the line.
Correct. Let's swap it now. Let's go to investing.
Yeah, let's go to the boring side now.
The boring side, but the good side. It's the one that actually helps you accumulate wealth over the long term.
Well, investment is that should be the foundation of your wealth creation.
Your bedrock.
The trading can't, like as we've said before, that's a small percentage that it is the bedrock of their and the foundation of their wealth creation.
Yeah,
investment's where you get your wealth creation. If you invest in the right stocks, you invest in bonds, you invest in property, you invest in the bank, whatever you do over time. Unless you're a horrible stock picker or a horrible asset class picker, you buy the wrong location, the ass falls out of the price or anything of that type of deal. But in normal circumstances, over the journey. And stock markets prove this. Even when they have declines, they recover. The blue chip stocks, right? I'm talking about blue chip stocks here, not the penny dreadfuls down the bottom where you and I play. Then over time you will make a good return. Now, whether you make, the ambition in the investment world should be that you make above CPI at the very minimum, so you're ahead of the cost of money, the inflation and the cost of money, and then try and accelerate it where you can, but don't put all your money in one.
Diversify.
Diversify your asset base. It doesn't matter what the amounts of money you're playing with. Still diversify. You should have an element in cash, just for you never know opportunities that come up. You might have shares. You might have term deposits. You might have I know you're into exchange traded funds.
ETFs.
ETFs. Whatever you want to build your portfolio to be, just don't have everything in the one company or the one asset class, unless it's all cash. You'll probably go behind if you keep your money in cash all the time, because CPI will increase above cash generally, but you're not going to go backwards in real terms in the amount of money you have. So, you just got to understand yourself. I would encourage people to get advice. Probably the one thing we forgot to say at the beginning of this.
We can't give advice. We're not allowed to give advice.
None of the things we're talking about today are financial advice. So
not at all.
Please just take our theories and our philosophies as part of an education phase, but don't make any decisions on the back of that.
Absolutely not, especially becoming a trader. Here's a question. Do you think a trader can become a good investor? In other words, he's trading, but he also wants to make some good quality investments on the side.
It's a good question. It's a good question. I think there's certainly the balance of traders becoming investors is far greater than investors becoming traders.
Correct.
And I know you didn't ask me that question, but investors struggle with being traders.
Well, of course.
Because they're swimming in the deep end and they're not very good at it.
Yeah.
Can traders become investors? Outside of those top percentages at the top that are creaming, doing really well at trading, I would argue most traders actually are a hybrid. They would have investments. They might have their own home. Yep. They might have an investment property, or they have other shares, superannuation, things like that. So I would argue they're probably shit traders, but okay investors.
Oh, really?
Yeah. That's what I would argue, because they've probably got safe investments over here, and hopefully they're not taking too much out of this bucket and putting it over here.
That's what I've seen.
Yeah. I've seen people lose their home over, not in recent terms, but back in the 80s and 90s, I saw people lose their homes on the back of bad investment decisions and trading and thinking that everything goes up and never goes down. And
Mark, make no mistake, there are people who are trading now who are losing a lot of money. Because, for instance, contract for differences, the amount of leverage...
How good are they? I love those babies.
Yeah, you do. I mean, they should be banned, by the way. In my world, they should be banned.
People who say they should be banned, they should be banned.
No, they should be banned. I mean, imagine now...
it should be cancelled, mate.
We've just said... That was quick. We've just said we can start off with $1,000. Just trading.
Yep.
And you mentioned $250 and, take it step by step.
Yeah, it doesn't sound like a lot, but but the leverage you get there, it's okay. You can have some fun.
Leverage. Do you know with $1,000, I can have leverage up to the value of...
What is it, 0.2%? Is that the leverage on some of those indices?
If you're a professional and sophisticated investor,
yes. And it's what, 10% if you're not?
No, 20.
20%.
20.
So you get 5 times your money
Yeah.
if you're not a professional investor. If you're a sophisticated investor, which is under ASIC rules, it's Section 708 of the ASIC.
You need an income of about $250,000 and assets
of over two,
2.5 million.
Check it on Google; it'll tell you what it is. But so if you qualify for that, you can get supercharged leverage on all these platforms.
So it's possible with $1,000
you can get
account balance,
200 grand. I think it's 200 grand exposure. Is
to
it?
250,000
at 0.2%.
Yeah, and you can blow that within 2 seconds.
Yes,
literally two seconds.
Yep. Especially if it goes the wrong way and you have no stop loss in place. Yes.
Yeah. So a stop loss. Did we explain that?
No, you explain that.
So a stop loss is before you actually execute a trade. You mentioned that you need a plan. In my head, if I decide that, let's say I'm having a bet on the Aussie 200 and I think it's going to go up.
Yeah.
I want to limit my losses. So, for instance, let's say I put $1,000 in. I'm only prepared to lose $200. That's it.
Yep.
I've predetermined it. I've logged it onto my platform. So no matter if it goes really sour, the most that I can lose is $200. The reason why I would do that is to take the emotion out of the trade. I don't want to be in a situation where I've put $1,000 in. I've got no stop loss. And all of a sudden I've lost 200, 300, 400, 500. And then I'm starting to hoping and praying 600 and 700. I'm blown up.
Yep.
Whereas stop losses, it actually takes the emotion out of it. It's either going to work or it's not going to work. You can adjust your stop losses as well. So it gives you some sense of comfort. What I find is the majority of traders, they do understand what a stop loss is. They come to the crossroads of fear and greed, and they allow their imagination to run wild. And it's those sort of characteristics that will always see you in red. In other words, continuously losing money.
Yeah, I don't disagree with any of that.
Which is not a good thing.
And it's a bit like we said at that top end trader where they'll lose $1 to win 4, and that's their sort of matrix. So they might lose 3 trades, and then the 4th trade they'll make the 4, and so they made it all back +1. And so they at a cumulative level they're going to be ahead if they get the trend right. Now if they do 20 trades wrong, they'll be $20 down. It's interesting you mentioned greed and fear and greed. That is the trader's Achilles heel.
It certainly is.
Because greed means you'll miss out on opportunities when I say you miss out on opportunities, you won't take a loss because the greed of losing money. So
Correct.
I'm going the wrong way here.
No. It's the fear of losing money. No one wants to lose.
No.
Especially when it trades. The fear of losing money. So instead of making a calculated decision, which stop losses and stop profits too.
Profits, yeah.
Or take profits. If you don't have those in place, then the notion of you losing money, you can't bear it. So you can't make a clear decision. And if it works against you, you've just done your dough.
Yeah.
And that's what I've learned I've been doing this for a bloody long time. And even today, sometimes I get frustrated. I want a revenge trade. Why the hell did I lose out of that one? Well, I'm going to go again. Bang. I'm going to go again. Bang. Even today,
start chasing those losses.
Sometimes my emotions take the better of me. I do remind myself of what I've done in the past. I've had some pretty bad experiences. Although I'd like to think that today I'm starting to manage my losses at a better rate. Because you can have, this is unbelievable, but out of 10 trades, if it was possible that you could win 9 out of the 10, that's highly unlikely for a trader.
That's tough.
It's highly unlikely. 9 out of 10 wins. You could lose it all with your 10th trade.
Yes, 100%. Especially if you have no stop loss.
Exactly. Yes. You can blow the whole lot.
And a lot of it's to do with psychology. So if you think about stop loss, I think the biggest obstacle people face, and I've faced it myself, is you start with the right attitude. Yeah, I'm going to put stop loss in. I'm going to be disciplined and whatnot. And then I can almost guarantee you the first few trades where your stop loss is triggered, that play is going to turn around quick.
Yeah.
And then you think, geez, what I take
why
that
do I
stop
do that
loss for?
for?
Like,
My
because
goodness.
5 minutes later I'm back in profit.
Exactly.
Right?
How could I stuff it
and I
up?
left all this profit on the table
Your
and all that
emotions.
sort of stuff.
It's your emotions.
And so people then, the psychology of that says, nah, stop loss crap. No, I would have made, and all that sort of stuff. And the reality is, sure, a percentage of them will turn around. A percentage of them will make it look like a goose that you took your stop loss. It's the ones that don't that will save you. Because when they go wrong, they go horribly
really
wrong. And so instead of losing $250 on 1,000 or $100 on 1,000, you could lose the whole 1,000.
Let me tell you what happened with me some years ago. I used to, I was about to say invest. You don't invest, you're gambling. On the German indices, which is known as the DAX. I clearly remember it was sitting pretty high. Monday went up, Tuesday went higher, and Wednesday went even higher.
Ah, the 3-day rule.
The 3-day rule, right? That's the Harry Petropoulos rule. If it goes really up within 3 days, I think it went up like 4% in 3 days. I mean, that's a lot.
Yeah, that's true. It is a lot.
I mean, that's just a hell of a lot. And I thought, you know what? It's gone up for 3 days. I want to make a bet that it's going to go backwards. I mean, that's basically saying I want to go short. So I make this bet. I find that Thursday and Friday it's flat. And I thought, okay, well, this is going to go down on Monday, so I'm going to make a killing. And on the weekend, you go through that fantasy land. The Porsche's coming, the Ferrari's coming, the holidays are coming. That distorted thinking. I love that thinking. So you get around.
It's funny how we never think I can't eat next week. I'm not going to be able to pay
so
the bills.
true,
We don't think those things. We just think about cars and women and whatever we think about. But it's always of a positive nature.
But this is what traders go through. So in this particular situation, it was a pretty big bet. So the weekend blows over. You're looking forward to Monday because apparently at that particular weekend, I think there was some bad news from the US because when the markets close...
but when you took that trade, did you have stop loss in place or not?
No.
Okay.
No, so I'm trying to prove the point
so
why
you were rolling the dice.
Yeah, why you need a stop loss. So Monday comes around. I think it went up like 1%. I've gone, really? Jeez. Oh, don't worry, it's going to come back on Tuesday. Tuesday, Wednesday, Thursday, Friday went up. I got killed. If I had a stop loss, I wouldn't have had these emotions. I would have suffered a small loss as opposed to taking a beating. That was a good lesson to learn.
I think the other lesson you do, I don't know if you've learned this one, is your decision making to get in the first place.
Oh, yeah.
The strategy of, because it went up for 3 days, it's got to come down, that's not a great plan.
In your world. In your world. You don't want to criticize my trading because I can give you... I just explained to you the German DAX. I can tell you about the Dow, how I've killed it.
Yeah,
but that's your world.
No, I want to hear that one too because that one was a good story.
So...
this is making money while you're asleep, right?
Yeah. So with trading, there's a bit of luck. Actually, you know what? That's crap. There's a lot of luck. All right.
Yeah, I agree.
Yeah, because effectively with trading, you're betting on the direction of the stock or the indice. There's only 2 directions, up or down. They're the only directions.
Yeah.
So during COVID, I decide that I'm going to take a pretty big punt, no different to the one we're talking about, the German...
Where you dropped your DAX?
Yeah, dropped the DAX. Have you heard the other one, the FTSE CAC its DAX? No? Have you heard that one? FTSE being London, the CAC being Paris, anyway. I don't know why I said that. I shouldn't have said that.
No, it's funny. We're here for gags too, mate.
Yeah, we are.
Even if they're bad jokes.
So I've gone to the Dow 30, the Dow Jones, which is the 30 biggest stocks in America. And I thought, you know what? There was no science to it. Charts, there was. There was this thing was bouncing up and down every second day. So this is coming off a great big bounce. So again, no science.
Is this 3 days again? Or?
No. It's come off a big bounce. All right, it's gone through the roof. And I'm going, you know what? I'm going to hit it. It's going to go down. So it was getting late. I'm tired, Mark. So
what time are we talking here?
We're talking
midnight
then.
or?
Oh no, it was later. No, because
with the birds singing.
No, it's 1:30 in the morning, our time.
I know the birds are still asleep.
Yeah. It's because of daylight savings and all that sort of crap. So the American market either opens at 11:30 or 1:30, depending on the daylight savings.
Right.
So I put a pretty big bet on. I've got a stop loss. I do.
This time you had a stop loss
because of the German.
Because you
thing.
learned you drop your DAX exercise.
Yeah, the German thing. Yeah, I still have nightmares about that German thing. Let me assure you.
The more it's prominent in your mind, the better it is.
Actually, that's a good point.
Because it's a trigger to not go too hard.
Because that's the German one that I did helped me to basically put a stop loss on everything that I do.
Yep.
All right. So on this particular night, I thought, you know what? Yeah, I'm going to do it. It was pretty big. So I take that contract, I put a stop loss on. So I go to sleep.
Did you have a take profit in the structure as well? Or just protection on the downside?
No, just protection on the downside.
Run free?
Yeah.
Okay.
Yeah. So I just had protection on the downside. Sometimes I also have protection on the upside too, but in this instance, I don't.
Yep.
So I go to sleep. Oh, mate, I've got to tell you, when I woke up in the morning, I had the best morning ever. I was doing somersaults. I reckon my whole suburb heard me. All my neighbours.
You were singing
me.
Sweet Carolina?
I just thought I am the greatest trader in the whole planet. It was good. It was a fluke, mate.
Yeah.
It was just
something
fluke.
happened that triggered the market and you got lucky on it.
Yeah.
It's a bit like, what was it, 3-4 episodes ago, we were talking about crypto and I got lucky where they fell 25%.
In one night.
That one night.
You didn't know it was going to fall 25%.
That's not my skill.
Nah.
I thought it was going to fall, but not 25% in one night. So, sometimes, I go back to the hard work makes people lucky. The harder you work, the more you get lucky. Just winning by luck alone, without doing much work, that's lotto, that's Powerball, that's that stuff. But so it's an exciting part. It's not for everybody, and some people wonder what the hell we're talking about because a lot of this lingo will be foreign to them. But I do know there's a lot of people that like trading. Some people are a bit daunted by it. Some people think they don't have enough money. Some people don't know how to go about it. So hopefully stuff we've taught them today will help that. But there is one area I'm really keen to, you've spoken to me a number of times about, is these things called suicide trades.
Suicide trades.
Yeah, so this is really going to the top end of the risk profile.
I mean, this is really bad.
But with some protection. And so
this is really bad.
But it's only bad because of the, when you explain it, but the volume of money that the person... That's involved. But you can do the same thing with lower amounts of money.
And you
can't make the same amount of money as the person does, but it's all relative to the amount. So whether you do $1 million, $100,000, $10,000, $1,000, the strategy still applies. So I'm really I quite like the strategy. If you can do it in moderation, I haven't done it. I haven't implemented it myself, mainly because I sleep, and so this is going to come out in times when you got to be awake. But I like the strategy. So over to you.
So
you explain it in.
So I have a mate who just retired. He basically uses contract for differences.
Yeah.
Okay. And I said to him once, how do you trade? He goes, oh, look, I do bits and pieces, but sometimes I take a suicide trade. So what's that? And he goes to me, oh, it's high roller stakes. It's worse than going to the casino. And he doesn't go to the casino.
He does, it's just at home.
But he does it at home. I go, what's a suicide trade? And he explains it to me. And I've gone, what? How in the hell do you have the courage to do something like that? Let me explain.
Yeah.
In real numbers. Let's assume, and let's talk about the Dow.
Yep.
All right? Dow's sitting at 40,000.
Yep.
What this gentleman does, he basically trades around news. So
like economic news.
Yeah, economic news.
Like CPI, unemployment rates.
CPI
something that trigger the market
CPI
one way,
classic.
Upwards or downwards.
Yeah, CPI is a classic, right? So if Wall Street believes that CPI is going to come in at 2.5%, for example, then nothing will happen to the indices because it's come within expectations. But can you imagine if the CPI came in at 2.8%? The markets will sell off like crazy.
Yeah.
Okay. So what this gentleman does, he's a contrarian. He doesn't listen to the bozos at CNBC and Bloomberg. So he takes out large bets. So on the inflation data...
So if he doesn't take any guidance from all those pundits, which is fine, how does he go about making a decision on whether he should go long on the economic report that's going to come out and think it's going to be good news and the markets will rally, or go short because you think it's going to be bad news? How does he go about making that call?
So out of the this is how Chris explained it to me. Out of the 16 economists that are surveyed by Bloomberg, and they basically come out with their suggestion. There's always going to be one or two who are not going to be consistent with the majority.
Right.
And he
narrows in on them.
He studies the reasons why they're not part of the narrative.
Okay.
And if he
That's
agrees
a good
with
way
it,
to look at it.
yeah. So if he agrees with it, he decides to take a contrarian view. So he's basically the 2 are going against the 14.
Yeah. Okay.
Okay. So if
And does he keep statistics on how right or wrong any of these people are that he's basing this on? Does he go to that degree? Or it's
he
just
will
case
tell
by case?
Yeah. So he will tell you that whoever listens to
Doesn't matter about who. Let's say it's Buffett and it's Shapiro or it's this or it's that. It doesn't matter who they are.
His
but
attitude, which
there's some people he follows and some people he doesn't.
he reckons
is that
they're
how
all
he goes
clowns.
about it?
He reckons they're all clowns.
Even the minority ones that are contrary.
I'm not too sure whether he thinks the minority ones, but he thinks. Mate, look at the interest rates here in Australia. I mean, let's be straightforward. Did they say in 2024 we're supposed to have 3, 4, 5 interest rate cuts?
I don't listen.
I do remember. I actually do. Someone said 3, someone said 4, someone said 5. It was a guaranteed. It was 3. It was guaranteed, and then it was 4. We had none. Now, these are the experts.
Yeah.
No different how my mate listens to the clowns on Bloomberg and the CNBC. They'll get it wrong. Like, if you go back and have a look at all their predictions, most of the times they're bloody wrong. I'm not saying that I'm right, because I'm just as wrong, perhaps even more wrong. But he just ignores that noise. So going back to the narrative of how he trades, so let's go back to the example, Dow's 40,000 points, and he takes out large contracts. Like, he may take out 50 contracts. So let's do the numbers.
So that's $2 million exposure. Yeah, US dollar.
By 40, that's 2 million US, which is about 3 million Aussie.
Something like that, yeah.
Okay. So hold that 3 million at the back of your head. So I want you to imagine CPI data has been released and everyone's expecting 2.5.
Yeah.
And for some unforeseen reason, the 2 out of the 16 said, no, it's going to be 2.7 or 2.8. And that's what happens. The numbers are released. Guess what happens to the Dow Jones?
It falls.
And it doesn't fall a little bit. It falls like a rock.
Quickly,
seconds. I want you to imagine that, and this is not unusual.
But that's, unless he's picked the wrong direction, that's exactly the reaction he wants.
Correct. That's the reaction that he wants.
Yeah.
Okay?
So does he get in like a minute or 5 minutes or 10 minutes before that news is coming out?
Yeah,
like,
he does.
Does he time his entry?
Yeah, he does. He gets it usually a couple of minutes before they announce the actual report.
Okay, and so and we'll just go back to US dollars.
Yeah.
So he's taking 50 parcels. He's got his margin in place. The exposure at a post margin era
the value is $2 million US.
And so, what does his stop loss? I'm assuming he uses stop loss on a trade like this.
Extremely tight.
Yeah. So if you're working off 40,000 points on the Dow,
From memory, it's about 100 points.
So 40,100.
Yeah.
He's out, regardless what happens
Yeah.
thereafter.
So he would lose 50 times 100,
which is 5,000 US.
He would lose 5,000 US, and that can happen like really easy.
Okay. And on the positive side.
Yep.
Does he just let it run and see where it lands from a profit-taking point of view, or does he have predetermined plan for the profit-making?
There's a predetermined plan. If it goes his way and it falls like a rock, he usually sells half. So out of the 50 contracts, he'll sell half. And sometimes he waits until the physical market opens.
Yep.
Because what usually happens...
Futures.
Correct. Because sometimes what happens, the futures say X, but when the market opens, the futures can sell off even more.
Yeah, accelerates further, yeah.
Okay.
And so it feels like it's not dissimilar to the guys I was talking about that are pros at the top end, where
he's not a pro.
They'll risk $1 to make $4. So if he's risking 5,000 US, is he thinking I'll make 40, 50 grand? No, sorry, 20 to 25 grand, or is his profit expectations a lot higher than that?
A lot higher. I mean, I've seen profits as high as $313,000.
Wow, okay.
I mean, that's huge.
Yeah.
Does that mean that he gets it all the time? No. Does it mean that
he's punting on his interpretation of the results coming out the right way. So
Correct.
not only has to get predict what the results might be following all the guidance
Yeah.
that's out there, and then the market reaction to that guidance, and then get the direction right.
Correct.
So not an easy feat. Hence, it's called suicide trade because.
Oh, that's what he calls it.
Yeah.
He calls it these are suicides. So more often than once, you're going to lose out.
Yeah.
And hence why I say that trading is gambling. It's an absolute crap of a way to try and earn a living. I'm not saying that people, Mark, do not earn a living. I've hardly met minimal. That most people will lose on trading.
So would you call that trade an educated, high-risk trade
No, I'll call
or
it
an
stupidity.
absolute gamble?
No, I'll call it stupidity.
It's not stupid.
No, it's dumb. It's actually
Why is
stupidity.
it dumb?
Because we're going black or red.
No, he's not.
Yes, it is. We think the market's going to go up or down. It's black or red. It's worse than the casino. It's black or red. That's what he's doing. That's essentially what I do, but I do it as a side hustle to have some fun.
Yeah.
I don't treat it as...
Well, we don't know that's not for him, right? You probably do, but as an audience, we don't know. He could be uber wealthy and he just does this for fun, right? But and it's not important if he is or he isn't.
But do you know what I reckon with traders, right? There would be a percentage that would get started, would make a shitload of money. They've got so much money, they can muck around.
Yeah.
And have a bloody good time. And that would be a small percentage.
Yeah, but see, like, I don't mind that strategy.
Yeah, okay.
If you do it in moderation to what you can afford to lose, and that's really important. You know, when we talk about, don't risk what you can't afford to lose, and hopefully that's what he's doing, regardless of what these amounts are. It's a plan.
Yeah, it is.
It's a short-term plan, but it's a plan.
Yeah.
And he mitigates his risk by saying, okay, I'll risk 5,000 US. And really, you could take a zero off it. You could say, I'll risk 500 US, but I might make $5,000 to the upside if it goes in the right direction, right? So you can have as many zeros or not as many zeros as you want for it, and so you can all be relative, but it's a plan, and the plan is based on fundamentals of macro events such as CPI, such as interest rate. Whatever it may be.
Yeah.
If he ends up being successful at it, it will be his interpretation of economic data.
Jeez, I wonder about successful traders. I just wonder sometimes.
But he's not. What I'm saying is, he's just not just throwing darts.
No.
He's strategically looking. What did you say? He does it 12, 15 times a year or something.
Yeah.
Yeah. So that's not a gambler, because gamblers will do it every bloody 15 minutes.
Oh,
right?
or every 5 minutes.
So it doesn't feel like he's a compulsive gambler. He's addicted to the gamble. He's got to get that sugar hit every 5 minutes. It doesn't feel like it's like that. It actually feels like he's betting big. Don't get me wrong, but he's quite strategic. He's measured it to economic events. He's looking at the CNBC and the Bloomberg guys. He's making his own assessment of what that is. Whether he's right or wrong is a different equation, but he's making an assessment of that, and then he's creating a trading plan based on that homework he's done.
Yeah, he's very strict.
Yeah. So that's actually quite disciplined.
Yeah, he is.
And so what makes it scary is the amounts he's playing with, because he's having a big go at these things.
Oh, yeah.
But if you took a few zeros out of it, if he risked 20,000 US, not his investment, but with the margin as compared to 2 million US, then a lot of emotion comes out of that. A lot of scariness comes out of that. And you probably, the percentage returns will be the same, if not better, because you take some risk out of it. But, so I don't think that person is a full-blown addictive gambler. I think it's someone who's got a well-structured plan based on economic fundamentals, and what he's backing is his judgment, whether he reads it right or wrong.
I also believe that most traders today trade in the crypto world. I mean,
a lot of them do. The liquidity is nuts. You love crypto.
You know my view?
Yeah,
absolute crap. I can't stand crypto. But I do understand most do trade in the crypto world, and most of them get their nuts done.
I don't know if that's true.
Oh, it is.
I'm not sure that's true.
Oh, it is. You should research it. It is. They get their nuts done.
Maybe they do. Maybe they don't. I don't know.
They're quickly to show. See, this is what happens in the people trading in the crypto world. This is my understanding. And I've heard this many times. I'm up 400 grand. They won't take the profits because they've listened to someone on TV that Bitcoin's going to 1 million and Ethereum's going, what's the price of Ethereum? I don't even look at it.
$5,000, I think.
Is it $5,000 on it? That's how much I care. And Ethereum's going to go to 250,000 and Bitcoin's going to go to 35 million, all that sort of bullshit. So in their head, they go through this fantasy. Remember I said to you that we're all in fantasy?
Oh, absolutely. And I agree with that, because in their head, they've already priced, when it gets to that price, that's how much I'm going to have.
Yeah.
So anything short of that is a failure.
Yeah, spot on.
Yeah.
So this is a trader's mentality that they're going to this fantasy world. Look, I'm certainly not good at trading. I'm getting better at it in controlling my emotions, but I know where my threshold is. I'm just mucking about. To be honest with you, if I can make money to pay my supermarket bill, to pay my gas and electricity, for me it's all fun. Some people play golf. Some people like going to footy. I love trading. I mean, it's just my thing.
Yeah.
But those who have this adage that they're going to become multi-squillionaires and they're going to be on some yacht in Miami, you know what? Look, I'm not even going to say it because too many people have just lost money.
The reality is only a small percentage of people end up with that type of outcome. I agree with you. The percentage you quoted earlier that they blow up, I agree. You know, most people will lose, but they don't lose. It's like everything in life. People lose because of discipline, and they don't have a plan, and they don't have an exit strategy, and so they just jump in, and they just jump into the sea, and they don't see if there's current, they don't see if there's sharks around, they just jump and go swimming. And trading is a bit like that. If you just jump, you know, things are going to happen to you that are not great. You're going to do your dough. Whereas if you're structured and you're planned and so forth, you can survive in a land of trading. What we're trying to say today is, it should be more of a fun activity, not your primary source of investment income outside of your job. Yeah. And then we haven't covered a lot here today, but I hear so many people talk to me about, I'd love to quit my job and just trade.
Oh, some people have.
Yeah, and that's the emotions associated, the pressures associated, the emotions associated with making that call, especially if you've got a mortgage and you've got a family to feed and so forth. That's a tough call like that.
It's a tough.
And then you start making bad decisions because the pressure gets to you. Because Murphy's Law will tell you when you need it the most is when the market won't give it to you.
Yeah.
Just Murphy's Law, just how it happens. And so people just need to be careful. So, not giving advice here today, but as a grey-haired nomad here, just be careful. Do it for fun. Do small amounts of money. Learn. And then just do small increments in your size of investments as you learn, because, through losses is where you learn the most. And but everyone will do their so. But for me, it's good fun. I really enjoy it. Yeah. But, am I a gambler? I don't think so. Because it's not something I need to do all day, every day, and I don't rely on it for my livelihood. I'm not risking my family assets. I'm not doing anything. I've got like you said before, a side hustle. I've got a side hustle too. I just play around. If I make a return, it's fantastic. If I don't, I don't. I'm quite disciplined about the money management side of things. So I start with an amount of money at the beginning of the month. If there's a profit at the end of the month, even if it's $1, if it's $100, whatever it is, I take it out and I start the next month back to my original capital. And so I'm not doing the compound exercise. I'm just doing a return every month exercise.
So what type of return are you chasing every month? Or you'd
Ideally, I'd like to achieve 20% every month.
Jeez, that's good. 20.
Yeah, but I'm starting with I'm not playing with a lot of money.
Irrelevant. That's irrelevant.
But I think the mentality, if I had $1 million on there, for example, and I said I wanted to achieve 20% every month, the psychology of that is vastly different than starting with $10,000 and making $2,000.
Okay.
Even though the numbers at a percentage level are the same, the psychology is different. Because one is so much higher. Unless you have zero value for money, or the $2 million that you've got at risk is small change for you. And some people are uber wealthy, and maybe it is. But for most people, that's a lot of money. And so at the moment, because I'm working off small bases, I'm just chasing 20% a month. I think one month I achieved a really good return. The next month, pretty modest. But that's my plan. And
this is because of many years of experience you've come to this point.
Absolutely.
Let's face it.
Absolutely.
I'm in the exact same boat. It's because of the journey that you've gone through. It's only, look, I can't say now, it could be a long time for you, but it's only now that you're starting to put barriers and parameters on yourself where you're actually enjoying the process.
Yes.
Because I am.
Yes,
I'm loving it.
Certainly, the pressure's not there.
Yeah.
I'm not living and dying by the outcome of these trades.
Yeah.
I'm doing it, like you mentioned before, going to the footy, playing golf.
Yeah.
I do those things too, but it's just fun. This is what you do for fun. It's a bit of a release from my grind of the work that I do, and so I get a release. Same as the spending time with my kids, I get release for that too.
Yeah.
You get that mental release. Trading is a bit like that too, but I'm certainly not there 8 hours a day looking at screens, trying to work out every move, every this, every that. No, I'm not doing that.
Tell you what, now that I've just remembered, I've got a mate.
You got 2 mates. That's good.
We may even get to 3 by next month. You want your 20% returns. I want the friendship to go up by every month. Oh, geez, you're quick. I've got a mate in Essendon.
Yep.
Private family office. You may or may not remember this is a currency trade.
Oh yeah, FX play. Yeah.
Big money. So he rings me up and he says to me, geez, Harry, bloody US yen at 160. And it had a disaster. He went down to something like 145, 150, quick, like it was like in 4 or 5 days because of the bond yields in Japan. That's another thing. If you learn to become a trader, whether you like it or not, you will learn of macro events. You just can't help it, right? You will learn it. To cut a long story short, this gentleman thought that the Japanese yen was going to tank. And he wanted to put 2 million. I said, mate, don't.
2 million before the leverage?
Yeah.
Wow.
We're talking big money now, right?
Yeah. He would have had a big go at that. Did he take it or not?
Very wealthy family. I know him very, very well. Love him to death. I said, mate, you know what? He goes, but it's going to happen. I said, it may. You know what? Take a zero off, mate. Just take 1 0 off. Do 200 grand. Because no, 2 million. He goes, this is the way that he said to me, I'm Irish. I love this one. I'm Irish. We don't muck around. Either you're in or you're either out. He goes, what do you reckon? I said, don't do it. Literally do not do it. He lost 2 million.
He lost the whole lot.
Whole lot.
Oh God. Don't you find people funny when they ask you, what do you think? They're not actually asking you what you think. They're just looking for validation. And if you don't give them the validation, they go find it somewhere else. Because they're not going to change their mind on what they want to do. So it really doesn't matter what you say. They're not going to change their mind.
Ask me how long did it take for him to lose the 2 million?
No, I'm going to say a day, 2 days.
3 days.
3 days.
Do you know what he wanted to do when it was his last $88,000?
No.
Go again.
Double down.
Go again. I said, mate, let it go. Go drink your Irish beer. Go follow your Irish soccer team or whatever bloody thing that you do. Let it go.
Yeah.
And that's how quickly you can lose your money.
That's a harsh lesson. Yeah,
big lesson.
Yeah, these things play. They can, when they go to the downside.
If it worked the other way around,
you would have made a mozza.
Try $8-9 million. And we're talking now big numbers now. I mean, not everyone can actually do this. Let's just face facts.
Yeah.
But this is where you want to go for the king hit. I'm just not one of those.
No, but I don't know his net wealth, but if it's all relative to us putting 20 and him doing 2 million, fine, good on him. But that's great.
Hurts.
But yeah, but it's all relative, right? So,
no, but it still hurts.
No, I agree.
See,
I agree. There's no way I'd be
money.
Risking 2 million on something like that, no matter how high conviction I was. But yeah. But interesting topic for today.
No, it certainly is. So don't become a trader. Just invest and enjoy. Enjoy the journey of your investments, not trading.
Yes.
You're not going to disagree. It doesn't matter. All right, Mark, mate. Thanks a lot.
Thank you,
everybody. Looking forward to the next episode. Cheers.
Thank you for your time today, and make sure you subscribe. Press that subscribe button.
Oh, yeah, you've got to subscribe.
Our numbers are increasing,
yeah,
finally.
Whether you like us or don't like us.
We've got our century. We can hold that bat up. We've got a century. We've got over 100 subscribers.
Incredible.
So,
awesome.
so same.
Subscribe.
Subscribe.
Okay.
See you next time.
Cheers, Mark.
Bye.
Bye.